What's up traders, this is Dave and welcome to another weekly outlook. So before I will show you the analysis for this week and something very interesting about the dollar contract, we will look how it was looking the past week. So basically what I was expecting in here was a dollar pullback, right? So I was actually expecting that dollar will drop lower and we didn't get it yet, right? So yeah, market moved lower, then it moved higher, right? Now it's somehow consolidating. I think the accumulation is going on in here. So I was kind of right, kind of not, right? Here on the euro, I was expecting price going higher, then drop into this liquidity, which I said in the last outlook. And this is what I'm still expecting, is price to going higher in here, right? So it's kind of played out, you know, but not exactly as I was thinking. I had actually one long in here after the FOMC the next day, but it just went a bit higher, right? And then the rest of the positions ended on break even. And yeah, the gold, my favorite pair right now. What I was expecting in here, it was a pullback below this level, right? So here I wanted to go long, and my target was this, right? So how this played out, so as you can see, it went to the target, but after that it did that pullback, right? So how I played in here, I had the long here, I had a short here during the FOMC, and then I had a long here on the Thursday, right? So basically not always it plays out as you predict, but important is that we got good levels and it was possible to trade in there, and I had made some gains for my investors. So basically on the after the first week on my PEM on the FX Hunter Wealth 2 strategy, I made 4%, and on the FX Hunter Wealth 1 I made 9.85%. If you're interested to join this, just click on the link below this video. Those who following my prop firms trading, I traded just the Thursday on the gold, that low below that 50%, right? So there I had the trade. Then I was trying something on the Friday, but then I decided to close it, right? So slight loss on the Friday. All right, so right now, why the dollar index actually is consolidating and why it didn't make what I was expecting, right? So let's look at this. So this is contract expiry dates, right? So basically what was happening right now in this week, if you look at here, we can see that here is a dollar index DXYU3, which has started in the June and then close only until the 14th and expiry on the 15th September, which was actually when? Which was actually here on the Friday, right? It's Friday 15. So in here, actually all contracts for the dollar was ending. So that means that everyone who's trading the futures, at least this date, has to close their positions and the rollover reopen into the new contract DXYZ3, right? Which started on the 14th. So they actually could be doing it on the 14th, somewhere in here on the Thursday, right? And then they continue trading until the 14th December, right? And again, it's continues like this. So what actually happening in here, and we can see it in the COT data. If we look, here was all positions closed, and right now in here in the next week, all participants are forced to reopen the positions again. So what happened in here? Look, we can see that shorts dropped from the 19K to the 8K, right? So what actually happens, and this is data from the Tuesday report. So when is the Tuesday report? If we look, Tuesday is here, right? So we have this period, right, when we can see in drops in the shorts, right? So less informed traders would be thinking, okay, it's bullish, it's going up, it's a drop in the shorts. Well, if you think about it this way, if you are forced to close your trades in here and then you see this price action like that, will you be opening shorts in here? No, most likely you would wait in here, right, above it in the proper in the proper order block, if you look at left and the fair value gap, which is actually the liquidity zones. And this is why I think we are ranging right now in here, because here is the accumulation of the shorts coming, right? So what was actually happening for this whole week, we can see for this whole month. So we can see that from this monthly open, right, we can see price going higher again, right, again, 3rd weeks in a row, and it's leaving these beautiful lows of the weeks as a liquidity, and here is a monthly open and big fair value gap, right? So in my opinion, all this month, because large players, they know that this will be ending, so what they're doing, they have close only. So this is a distribution in my opinion. And now if they will want to in this new contract go longs, where they will do it somewhere below a 50% of all this range, right? So in my opinion, this drop is coming in this week, right? So I am bearish for the dollar, but I am still aware that if we look at it from the daily, I have this level, but if you scroll up a little bit to the left, we can see this, right? So it's a kind of a, you know, it's an equal high, so it's definitely a liquidity level. So what I think is that it will be reached, but in my opinion, as we have a new contract, there will be a new buying into the new contract, and it will be done a bit lower, right? So this is my analysis for the dollar. Let's go to the euro, and euro is obviously opposite, right? So it looks almost same. Let's have a look to the COT data. So let's start with COT data. So what we can see in here, we can see that there is a long-term drop in the short positions, right? But again, right now we have 1 week, 2nd week, 3rd week without any proper, you know, stop hunt. So in my opinion, this we will see move above this 50%, because in my opinion, if it is bearish, there would be position building above this, right? And especially if the dollar needs to take it lower to build the positions, right, before we going lower. So we can see that there is a drop in the longs and there is a slightly growth in the short side, but it's not that significant, right? So basically we are still huge in the longs, right? 66%. So in my opinion, if we will go much lower, there would be some case, because this is a quite significant level as well in here, which was reached. There would be something like this, you know, where we will want to open close these longs and open more shorts, right? So again, if we are looking at it in this way from the quarters, so right now let's think about it. This is a year, right? So we have 1 quarter, you know, 2nd quarter, 3rd quarter, you know, and 4th. So we are now actually going into the 4th quarter, because it's going to be October, November, December, right? So this would be a distribution too. And what actually happens on the first, always on the first first weeks, on the beginnings of that new quarter, right? Because we got the new quarter in this contract, right? New quarter is of always accumulation. So in this smaller period, it would be a distribution, but in the higher time frame for the next 2 weeks, it could be this accumulation. So anyway, that's too much theory. In my opinion, based on this price section, we will see a push up, right? So I am bullish on the euro, and in my opinion, that's a perfect alignment with the gold. What I'm thinking about the gold is that we are going much higher. So yeah, here is how it played out. So we had this level, then price moved higher. Last week my target, was reached. I shorted, then I longed in here. So what I'm expecting right now is that price will definitely go above this, which is a 50% of this range, right? And it would be perfect if we drop lower and move higher in here, right? As well, I always don't have only one scenario, but I'm always aware that what could happen is that price could go lower into this nice order block, right? So between this 69.79, sorry for this ugly one, which is a from this high and this low, right? It's a better part where to be a buyer, right? If you look to COT for the gold, we can see, right, there is a clear growth in the longs and shorts being closed, right? So again, we are getting to the 70% exposure to the long side, right? So we have 135 longs, and let's look where actually was this Tuesday. So you can see it was in here, right? Tuesday. So somewhere here was this report, and we don't know what happened in here. What most likely happened in here. This was actually big manipulation this whole week, because if you look, where is the weekly open and where is the weekly close? You see, actually on the same price. So what they did, they actually maybe sucked people into the longs and they took them out on their stops, right? Because if price broke up in here, so where people put stop losses here, and maybe some, below this one, because it is a fair value gap, right? So basically what happened in here, suck more people into the longs, which creates a liquidity in here, and then going for that liquidity, right? And yeah, so I'm bullish. The COT and seasonals for the gold are bullish, and I will be looking for the longs. And obviously, as I'm a day trader, in some extremes I would be looking for the short. So where would be extreme for me? I won't say like extreme, but anyway, if I plot a FIP 50%, right, and I like to play, so obviously this one, so then where I think the price could start to do something is if we go lower, then 61.8, 79, this fair value gap in here, or as well we can take it as this balance. Sorry, let me take this one, this balance price range. Obviously, if we are bullish, we should not be shorting, but depends on the time and when the price will be in here. If the price will be in here around some New York equity open, then some pullback would worth it. All right, my friends, happy trading. Bye bye.